computer. It's much easier for me if I
Yeah.
record to the cloud.
Oh, definitely, definitely. Okay, so yeah, so when if we need to add more to this conversation next week, then by all means, because there's a few conversations at least that I would love to get your take on when it comes to people who've done their own research when it comes to the amount of money in circulation, the amount of money printed, multiplied by money. I guess the volatility of money, like basically is money just being held or is it actually being circulated? And to include that, I mean, we could have a brief discussion on, you know, on your perspective on that, because that's definitely one of my, I don't know whether to call it a thesis or just to call it my perspective. The perspective that I hear used most readily is one to do with money printing, as well as let's say the awareness that it's better to have cash in an asset than it is to have it in fiat currency, because the understanding that inflation does away, like erodes away at the purchasing power of your fiat currency, of the money that you have in fiat dollars, the buying power. So over time, your buying power is reduced. So, I mean, the basic topic of today's discussion is Bitcoin a good hedge against inflation?
Right.
And yeah, from the arguments I hear time and time again, it's that, especially since the pandemic started, especially given the massive amount of money printing. I said last week, maybe it was incorrectly stated, it was 40% of all the money ever printed was printed in since 2020. I don't know if it's that high. I need to like get the source of that number, but the fact still remains that it's been a tremendous amount. I mean, since 2020, it's a large amount. And so to recognize that is a large factor that increases inflation, so that at least there isn't a recession. So inflation is a necessity. So to have an asset like Bitcoin, or at least to invest in it, in one's wealth portfolio, to, I mean, I know that by and large our conversations up until this point is that we understand it could potentially go to something close to zero. I mean, we've added a little nuanced caveat that because for as long as we live in this digital age, maybe it won't go to zero, but that it might be significantly decreased once some country, whether it's China or whether it's the US, has their centralized digital currency. So that might be one of the main factors that cut into the desirability of Bitcoin. But for the time being, at least, the argument that I think holds a lot of water, and I'd like to get your take on, is that Bitcoin is a good hedge against inflation. But yeah, I'd love to hear what you have to say, what your thoughts are on it.
Okay, so there's just a few things I'd like to sort of take a step back on this.
Okay.
And one is the word printing of money.
Okay.
And the reason why I'd like to take a step back on that is because when people use the word money has been printed, the vision that they have in their minds, and this is reinforced by television sets where the news reporters need a graphic. And so what do? They use the graphic of the printing of physical currency, okay? And that perpetuates a misunderstanding. And I'm trying to figure out whether that misunderstanding really makes any difference, okay? And maybe it doesn't matter. So this is me going after something that maybe doesn't matter. But by far the largest part of what's normally called the money supply is not bills, okay? It's not physical bills. So the physical bills, and I don't have the numbers, and this I apologize for, and if you want me to get the numbers, I can do so. But the physical bills actually correspond to a relatively small percentage of the total money supply. And in terms of monetary policy, it doesn't really make that much difference. Okay. And if you're in a country like China, where you have this reduction in the amount of bills in circulation because people have converted more to electronic cash, then it makes even less difference. But the change is much faster. Okay. So what is the money supply? And what does, quote, printing dollars, unquote, actually mean? Okay. So I'd like to just address that. When people talk about the money supply, most often they have in mind a liability that they hold of a bank. That let's say the bank owes them a certain amount of money. So this is the debt of a bank, the debt of a commercial bank. And so when people think about the money supply, that's what they think about. That's what they think about, you know, how much money do I have in the bank? What they're asking is, how much money does the bank owe me? Right? Now, banks they print debt, right? They issue debt. I use the word print, unfortunately, because the bank actually don't print that debt. They just issue it, right? They say, okay, you, Owen Thomas, I owe you, Owen, $2,000, if that's how much you have deposited in the bank. When you talk about the central bank, that's, quote, printed. So the terms money supply, M1, M2, those things are dominated by bank liabilities. Okay, that's the largest amount of it. So banks create debt, they issue debt in order to fund their purchasing of assets, right? They buy things. What do they tend to buy? They tend to buy the debt of other people, right? Mortgages, right? So people owe them money, right? And how do they pay for it? They pay for it because they issue debt to other people. Okay, so you might think of this as a Ponzi scheme, but it's not. It is actually the way that liquidity, the way that purchasing power is circulated through the economy. So banks don't just issue debt to pay for things. They also issue equity to pay for things. Okay, so you can own the shares of a bank as well. And banks don't just have illiquid mortgages that they couldn't get people to pay back right away as their assets. They also have very liquid assets that are, they're really, really, that anybody would accept them, anybody of a large stature, any institutional financial institution would accept. And those are deposits with the central bank. Okay, these are the debt issued by the central bank. And so when people talk about the printing of money by the central bank, that's what they're talking about. They're talking about the issuance of debt by the central bank to commercial banks. Why is this important? Because those deposits of the central bank with the commercial banks are at the center of the payment system. So when you pay somebody else, you typically pay them by transferring a bank deposit, a commercial bank deposit. But if the recipient doesn't have a deposit with your bank, if your bank doesn't owe that recipient money, it can't transfer that directly. So your bank has to ask the central bank to reduce its deposit with the central bank and increase the deposit of the central bank of the other guy's bank. And that's the way payments are made. They're made through debiting and crediting the deposits of commercial banks with the central bank. So in the same way that you think you have more money if you have more debt that the bank owes you, more deposits at the banks think that they have more money if they have more deposits with the central bank. And so the banks are more comfortable lending out more if they have more deposits with the central bank. They're more comfortable lending out more and funding those largely with more debt that are held by the members of society. So through a multiplier effect, the central bank can increase its debt outstanding, and through a multiplier effect, it increases the debt outstanding of commercial banks. So if the central bank increases the deposits that are held by commercial banks with it, then through this knock-on effect, you have an increase in the money supply. And when people talk about the central bank, quote, printing money, what they're talking about is the central bank buying assets with its own debt. So what are these assets? Well, the central bank could buy tables and chairs, paintings. They could buy, fake flowers. They could buy anything if they wanted and pay for them with their own debt. But that's not typically what they do. When they increase the amount of their debt outstanding, central bank balances outstanding, what they typically do is buy things like the debt of the federal government or mortgages. Why mortgages? Because there's a lot of them out there. Okay? And when people talk about the central bank printing money more over the last decade and a half than at any other time, and typically they're talking about the Fed, the Federal Reserve Bank of the United States, than at any other time in history, that's what they're talking about. They're talking about the Central Bank of the United States, the Federal Reserve Board, and the Federal Reserve Banks, the whole system of central banks in the United States, purchasing private debt and paying for it by issuing their own debt. And their own debt is this extremely liquid set of deposits that are valued by any commercial bank because they can make instant payment through asking the central bank to debit their account with the central bank and credit somebody else's account. So what does that look like in terms of dollars? Well, this is what you asked about just a moment ago. And you said, well, this is the millions of US dollars. This is according to Fred, okay? And Fred is this Federal Reserve Bank data set. And I can't remember which of the Federal Reserve Banks in the United States actually runs Fred, but it's a good source of data. And so this is millions of US dollars. So this is 1 trillion US dollars. This is, what is this? This is the assets of the Federal Reserve Bank, the Federal Reserve System, right? So you have assets and liabilities. What are the liabilities? The most important part of the liabilities of the central bank is the deposits of the central bank held by commercial banks. Okay, so what you have, this is going along at about 700, three-quarters of a trillion dollars. Essentially, that was the size of the Federal Reserve balance sheet. Up until when? Up until the financial crisis that you just referred to. And so what happened during the financial crisis? Well, suddenly banks became nervous about lending to each other for various reasons. And when they became nervous, they didn't lend to each other. And what did that lead to? That led to a liquidity crisis. That is to say, banks couldn't pay other banks. And what happened? The Federal Reserve stepped in and said, look, what we're going to do is we're going to buy up a lot of assets, a lot of debt, essentially buying a lot of mortgages that were previously held by banks. And so banks, instead of having mortgages on their assets, they now have central bank deposits. They're very they find it very easy to make payment to other banks because of that. So when you, Owen, asks, because you ask your bank to pay $1,000 to somebody else, then your bank can easily find those central bank deposits on its balance sheet and ask the central bank to debit its account with the central bank and credit the account of the payee bank. Okay, so that was this. From about well, maybe it was, by the time the crisis was well into it, maybe you're close to $900 billion. Boop, it went up to about 2 trillion. Okay, and that was called quantitative easing. Now, there's typically a multiplier effect. As I said, if banks hold more central bank deposits, they're more comfortable in lending out more funds, and they fund those lending out by issuing their own debt. And we typically think of the money supply as, if it's M1, and then it's checking deposits. If it's M2, it's checking and savings deposits. If it's M3, it's checking and savings and some short-term money market securities, and so on. There's various definitions of the money supply. And this is a little bit awkward, because theoretically, in economics, it would be nice if there was just one money, okay? And money is that which we pay for other things. And if there was just one money, and if the money kept on sloshing around the economy at roughly the same rate, then if you increase the money supply by 50%, obviously, then, or let's say you double the money supply. If you doubled the money supply, then obviously there's more money to pay for things. And so the prices of everything would have to drop in half. I'm sorry. You doubled the money supply, the prices would have to increase. The prices would have to double. Why? Because there's more money sloshing around. It's worth less. Money is worth half the amount that it used to be per unit of money. Okay? Yeah. Okay, so that would be nice if we had a common definition of money that actually worked. The problem is we don't. We don't know what money is. What do I mean when I say we don't know what money is? We don't know what people have in mind when they think, well, I have X amount of dollars, therefore I will buy Y amount of goods. Okay? We don't know how people view how rich they are. And we know that if you had more money, then you spend more of it, if everything else being equal. So if people that are trying to control the levers of the economy want the economy to do more, then obviously one way to do it would be to increase the amount of money, and then people will say, oh, I've got more money, and then they spend the money. So monetary stimulus is a powerful tool of economic policy. But if you don't know exactly how people visualize what money is, then you don't know exactly how to use that tool. So the result is that there's many definitions about the money supply. Well, here we were talking about this. That was the financial crisis. And what was funny is that even though high power money, and that's what they call the deposits of the central bank, even though high power money had more than doubled in an incredibly short period of time, people didn't bid up the price of things. Inflation did not increase. And so this meant that the models weren't working quite the way they used to be. And throughout this period, quantitative easing continued, and essentially inflation did not increase. You can go back to the numbers, and I would have, but we're talking about inflation levels here less than 1%, at a time when the high power money has gone from under $1 trillion up to $4.5 trillion. Unprecedented increase in the balance sheet of the Federal Reserve Bank. And this wasn't just the United States, this was all over the world. So something was happening. So one can talk about the rate at which money was circulating. And obviously, if it was just the rate at which money was circulating, then money must have been circulating slower because you had more money. So presumably, money was circulating slower to offset things. Or maybe, we were becoming better at producing things, and so we could produce more cheaply. And that was offsetting the increase in the money supply. I'm not a monetary economist, but I can tell you that there was a lot of consternation about this period and the fact that inflation had not increased. But by the time we came about to here, people were saying, well, inflation is starting to increase. Not inflation like when I was a kid. When I was a kid, everyone sort of banked on inflation about being 5% a year, and then it went up in the 1970s up to, in some cases, over 10% a year in major economies, and that was too high, and so monetary policy was contracted, and inflation was, quote, overcome. But inflation started going up, and so quantitative easing started being restricted. That is to say, the Federal Reserve Bank started reducing the number of assets on their balance sheet. What they effectively did, since they bought mainly debt, and debt has a maturity, is the debt would mature and they wouldn't replace it. They'd bought these mortgages, they'd bought these mortgage-backed securities. When they matured, the Federal Reserve didn't replace them. And everyone thought, well, that'll just keep on going down, 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 down to something normal. But the something normal did not occur, because we know what happened over here. COVID-19, right? It's not an unprecedented epidemic, a pandemic. Obviously, we've had a precedent over 100 years ago in the Spanish flu, but it's an unprecedented one in the new order of the world, where we have a relatively integrated world that is largely digitally based, that's led by the United States, that is highly interconnected in terms of telecommunications, et cetera, et cetera. So this is unprecedented in our lifetimes. And in order to stop the economy from having a liquidity problem, people not buying stuff, what did the Federal Reserve do? They throw it in, they threw quantitative easing into overdrive. So instead of having $4 trillion of federal debt, there was $7 trillion and climbing, and it's now at $9 trillion. Now, if things were going the way very, very simple models of economics say that they should be going, then we should have had, 900% inflation, right? But we don't. We've got 5%, not even 5%, 3%, 2%. It depends on how you count it. Inflation is difficult to count. Depends on how you count it. So the point is, now we're starting to have inflation that starts to look like it's biting. So what will be done here? Well, presumably there'll be a restriction of the extent to which the central bank has been increasing the size of its balance sheet, the American central bank. Okay, but that's the story that you wanted. But this is not what you think of as the money supply. This is M0. It's not even M0. This is the size of the balance sheet. So M0 is a fraction of this. I don't know whether it's sort of 80% of this. It's not all of this, because there's other things in the Federal Reserve balance sheet which I would have shown you. But roughly speaking, this is M0. And when you talk about the money supply, you're not talking about M0. That's high power money. M0 is high power money. That's just deposits the central bank. What you think is the money supply is the deposits of commercial banks. Okay, so the numbers that I would show you if I was showing you the money supply would be different from this. But this is the easiest to grasp. And it also shows what printing money is and is not.
I mean,
So
from the graph that I was,
sorry, go ahead.
what's that? From the graphs I've seen around, I'm sure we could find them easy enough. The MT money supply printing, it is similar drastic uptick at the same junctions where there's been, I mean, let's not call it printing because we've already gone through how that's a misnomer, but it's yeah, if you want to type in M2
You
money,
want M2?
just type in,
Do
yeah,
it too. M2 it, Fred.
M2.
Okay, there we go.
Uh,
It's not as dramatic. And you don't see it the way I showed it because of course you don't see quantitative easing in quite the same way. But you do have, and here, so here we're starting in that graph what was here. It started round about here. And here, M2, these are deposits of commercial banks. And here it's we're starting at about 4.5 trillion. Okay, because M2, of course, is a multiple of M0. And there's the financial crisis there, and you don't have this amazing peak because that peak was the result of the central bank's policy, and this is the banging through the system, if you see what I mean, through the multiplier effect in the commercial banks. Okay, and if we started there at 4 and now it's at 24, then then it's not 9 times, it's only 6 times. Okay, so it's not quite as dramatic. But of course, M2, that's just savings deposits and checking deposits. So this is what you would have, but you know, you might have a money market fund, and you might think that that's money. So in terms of how you visualize money, this isn't the whole story. So you might want to look at, you know, M3, right? And okay, there's your M3, and so you're starting at whatever before the financial crisis at about 6, and you're going up to about 21. So that's four times, not even 4 times.
I mean,
okay.
The point here still is that it's still I mean, 2 points, I guess. I mean, and it's to the 2 points that you made. One, that this, or the central point really, is that even with the drastic amount of
increase in
assets that were acquired from the amount of money that's allowed to be in circulation, because it's not technically printing, but it is taking on of debt, that we haven't had the crazy inflation. I mean,
you haven't had crazy inflation, exactly.
That's like the central point. And like, well, let's look at it right now. What is the if we just Google estimated inflation for 2022?
See, I'm not going to get it from Fred quite as easily, but okay. Okay, let's go with the 5-year break-even inflation rate. Okay.
Okay.
So, right, it hasn't cracked 5%.
Right. Hasn't cracked 5%. And like you were saying back,
when I was a kid, it was always 5%.
Right. So it's not, that's like your point. And I mean, this all ties to the question of whether or not Bitcoin is a hedge against that inflation. And given what we've said earlier, which is like in previous conversations, that Bitcoin we haven't talked like, is it too volatile? But we have said that the volatility, given that it could still dip down to something close to zero, given the issuance of a central bank currency, because ultimately people want currency. I mean, as much as we talk about a store of wealth, like these are two separate things, I guess. There's a store of wealth, and then there's what we can actually transact in. Because people aren't necessarily, as much as there are, like, you know, Tesla, and you have certain companies that talk about accepting certain cryptocurrencies or altcoins. Bitcoin, for the time being, still isn't the technology until it's, let's say, updated. There isn't anything. It's too slow. It's inefficient as a transaction. So it's, but when it comes to that question of whether it's a good store of wealth against inflation, considering that inflation isn't this doom and gloom situation that tends to get painted, given the amount of assets that have been acquired by the central bank. I mean, yeah, for you, it seems to be pretty clear that it's all overly speculative. Is that right?
Yeah. Yes, that's right. I wanted just to make a minor amendment to what I said just a moment ago. Right. I use the number 5% from my childhood. I should be using the number 2% from the fence, what central bankers want. Central bankers don't want the inflation rate to go over 2% because they're afraid of inflation running away. Okay. They don't want it to go much below 1%. Why? Because they like a little bit of inflation in the economy so people will not delay their purchases. Okay, if you think your money is going to be worth more later on, then you tend to delay purchases, and that's not good for the growth of the economy. So this period, from whatever period here, where inflation was generally below 2%, there's the 2%, was, quote, good. From about 2021 January to now, this is, quote, not so good, unquote. So I think that many central bankers would say that if they were facing inflation rates like this, they'd rather have a less accommodating monetary policy. But if with inflation like this, during the pandemic, taking a less inflationary monetary policy, they're worried about interest rates going up too quickly and stalling the recovery. And so they continue to be somewhat accommodating. Okay.
Okay.
So, right. So I think that though inflation rates above this are not above 2%, are not considered to be good by the standard economist.
Right.
So the question as to whether or not Bitcoin is an inflation hedge or a good inflation hedge, I think that you have to look at the period that you're talking about. I ran some numbers on inflation and Bitcoin. I wonder if I can still find them now. Yeah. Okay, this is the Satoshi price per barrel of oil. Okay, how many Satoshis you would pay for a barrel of oil. Okay, so this, if you are considering Bitcoin to be a currency, and you started in 2021, at the end of 2021, then you would be paying 169,000 Satoshis per barrel of oil. And now you'd be paying 316,000 Satoshis per barrel of oil. So obviously, this is the effect of the decline in the value of the Bitcoin since the beginning of the year. Okay, and you can say, well, yes, but if you went farther back in the series, then you'd be seeing a reverse effect. and that's of course true. You know, if we, this is the Satoshi price per barrel of oil. And the reason why I didn't go back is because I haven't cleaned up this data set. As you, if I tried to graph this, I'd get really messy stuff. But going back in time, you know, back to 2017, which is as early as I can get this, you'd be paying 4.4 million Satoshis per barrel of oil. Obviously, the increase in the value of the Bitcoin has meant that, you know, we now pay far less Satoshis per barrel of oil, right? What was the lowest? When was the lowest? I don't know what the lowest was.
I mean, typically, the further back you go, the lower.
Well, the further back you back, the more expensive the oil would be in Satoshis.
Right. Well,
but
I
there
mean,
was, but here in 2021, in April 2021, you paid only 94,000 Satoshis per barrel of oil. Right? That's Satoshis per barrel of oil there. And then the Satoshi price of oil then has gone up since then as the Bitcoin value has dropped. But I did this because I was playing around with an idea. Well, if Satoshis were what we were paying with, Bitcoin were what we were paying with, then we would have seen tremendous inflation, increasing price of oil since then. I chose oil because I thought I could get a price series going back, a clean price series. This is Brent crude oil. So I can get a clean price series going back to 2017, and probably I could get it back well before that as well. And now, even though it was less than 100,000 Satoshis per barrel of oil, now we'd be paying 315,000 Satoshis per barrel of oil as of April 4th. So my point is that anytime you have a
March 4th, it's not April yet. Are you talking about when, April of last year, or talking about April?
No, this year.
Or we're not in April yet. I mean,
No, this is day, month, year.
Right.
That's day,
So-
month, year. And that's how many Satoshis we'd be paying for a
Right.
barrel of oil. That's
So
4th of March, 2022.
March, yeah, 4th of March, not April. You were saying.
I'm sorry,
April.
I said April?
Yeah.
Sorry,
Yeah.
sorry. Yeah.
Yeah.
So my point is that anytime you have major volatility, you can have volatility going down as well as volatility going up. And so seeing this as a hedge against inflation runs contrary to what we normally think of an inflation hedge being. So since a year ago today, we've seen an inflation of oil price of over 300%.
Right.
Okay. Now, perhaps I shouldn't have chosen oil. Perhaps I should have chosen wheat or some other commodity. But you still, because of the drop in the value of Bitcoin, you still would have seen this kind of thing. Okay. So my point is that a highly volatile currency, in the way people normally think of it, does not provide a good inflation hedge.
Right.
What we'd like to have is a constant value of a currency rather than a highly volatile one. I'll just make one additional point, because there are studies that economists have done. I'll stop my screen share, of whether or not Bitcoin is a hedge against inflation in high frequency expectation contexts. By high frequency, I mean weekly changes. Inflation expectations change I guess you can say that they can change on a week-to-week basis. You can't get much higher frequency of that and have it meaningful, but you could think of inflation's changing on a week-to-week basis. And the way you'd measure that is on the difference between real return bonds, and that is to say, which it's not the difference in return on real return bonds and nominal return bonds. So it's a way one can calculate that. And so we can get a dense data series of inflationary expectations. We also can get that frequency in the Bitcoin price. And then we can get a whole string of likely economic variables, and you can construct a model. And this model can tell you whether or not expected inflation moves in the same direction as the Bitcoin price or in a different direction. And technically, from an economist's point of view, that tells you whether or not Bitcoin is a hedge against inflation. Because if when inflationary expectations go up, there's a greater likelihood of Bitcoin prices going up, then you have a hedge against inflation. And the punchline that I'd like to give you here is yes, it is a hedge against inflation. According to who? According to some recent economists that I've just been reading. Okay. So I can, if I can find the article, then I can give you the graphs, and this might give you a some idea of what I'm talking about. Okay, and they're not great graphs, but what the heck this is. All right, here we go. Okay, so share screen. So what they've done is they've run what's called a vector autoregression. And they say, well, the prices of, in this case, Bitcoin is a function of expected, here it's a function of a shock to the S&P 500. So if the S&P 500 goes up, then, and these are weeks, 5 weeks afterwards, Bitcoin would go up. If there was a 1 standard deviation shock, then you'd have a 0.04 standard deviation shock to the S&P 5. This is, I'm sorry, this is the S&P 500 on Bitcoin. So the shock to the S&P 500 goes up, and lo and behold, 5 weeks, 10 weeks, 15 weeks, 20 weeks, 25 weeks, 30 weeks. These are these things are the 95% confidence intervals. So going out 30 weeks, you get a positive effect on the price of Bitcoin. So Bitcoin is not a hedge against the S&P 500. They're moving in tandem. Okay?
Okay.
In this very simple economic model. Here is
like what are the weeks of this? Sorry,
these are weeks.
No, what are what's the timeline of these?
There's 5 weeks afterwards, 10 weeks after the shock, 15 weeks after the shock, 20 weeks after the shock.
Right, but what's the years in which the data set was gathered?
Oh, they ran it, I think, from 2010 to the present.
Gotcha. Okay.
Okay, so these are statistical,
Right.
but they are telling it a truth in these years. Now, whether or not this is the same truth that is functioning today, we don't know, because this is an agnostic test. By agnostic, I mean they haven't programmed up anything in a model that's trying to explain the economy.
Mhm.
Okay,
Okay.
so there's expected inflation. And guess what? A one standard deviation shock of expected inflation leads to a 0.03 increase in Bitcoin going out 5 weeks, 0.08 going out 15 weeks, and it seems to be pretty persistent. So there is, if inflation expectations goes up, then holding these other factors constant, the price of Bitcoin is going to go up. And in that sense, it is a hedge against inflation.
No different than any other stock you might own.
Oh, here, that's the S&P 500.
Yeah.
Yeah, but I mean, here it's positively correlated. Here's the VIX, which is increase in volatility leads to a decrease in the price of Bitcoin. Okay, so if the economy becomes more volatile, Bitcoin reacts negatively, and it seems to be pretty persistent. Okay, and that's Bitcoin price. This is gold price, because gold is also considered to be a hedge against inflation. Here, if the economy becomes more volatile, the gold price goes up. Okay, so to the extent that we think of a hedge against inflation or a hedge against things bad happening, gold seems to be doing better, because not only does it seem to be here, gold seems to be a hedge against volatility. Bitcoin is not. But Bitcoin seems to be a better hedge against inflation, expected inflation, than gold. Gold has, in the short term, a positive effect. In fact, it seems to exceed Bitcoin's going out 5 weeks, but then Bitcoin seems to have a persistence, which gold doesn't have. Remember, these are confidence intervals. So if the confidence interval, if we have a positive and negative, basically you can't tell the difference between it and zero. It's basically no effect. But here, since the 95% confidence interval is still greater than zero, you're seeing a persistent effect in Bitcoin.
Mhm.
So, yeah, I mean, it's an interesting. I'm not sure if it's useful.
Huh.
The orders of magnitude are relatively small.
Uh-huh.
Okay, they are statistically significant. It is a hedge against inflation, but it isn't a hedge in the way you'd normally think of it. That is to say, this is something that I want to have because I want my money to maintain its value. Because you have the extreme volatility in the Bitcoin price series, and we've seen over the last year that its prices has really suffered. So the average person looking at it would say, "Oh, that hasn't given me a hedge against inflation,"
Right.
because I have to pay 3 times as much now for my barrel of Brent crude.
I mean, it seems like, yeah, over a year timeline, you don't tend to, or at least the only way I get any sort of reassurance is, since the data set is sort of small, but it is over the past 10 years, as opposed to over the past year. On a year by year basis, you'll get volatility over the course of, I mean, and you could say, well, the volatility is even greater over the past 10 years, but the trend over the past 10 years has been such that, I mean, and so where are we
You're
in the next
talking
10
about
years?
the investment
Yeah.
in an asset that appreciates. Yes.
Yeah. So
And
like that.
if you believe that the demand for that asset will be greater than the supply in the long term, then yes. So the question is, what's the long-term demand for Bitcoin?
Right.
And relative to the long-term supply. Now, we know the long-term supply is effectively constant. So the question is, will the long-term demand exceed the long-term supply?
Well, just a simple or an interesting thought exercise that, or I don't even know if it's an exercise, but just the statement that gets thrown around is if all the millionaires in the world were to buy Bitcoin, I mean, there wouldn't be enough.
Well, everyone buys a Satoshi.
No, but like one whole Bitcoin. We're not talking about a Satoshi. We're talking about like a full Bitcoin at whatever the price is, given that it's not, at the time, zero or, a fraction of a cent.
But why do they need it?
Why do they? Well, I mean, why do they need NFTs? Why does anyone, especially now, like considering where we're at today in today's like geopolitical crisis, NFTs, they are nowhere near zero. I mean, they're more volatile than ever. There's definitely it's interesting equally to just as a simple graphing including trend setting. You can just use Google Trends and you type in. You can do it right now. Just go to Google Trends and you type in NFT into Google Trends. You'll see the how it's the way like the we call it the search trend analysis, and that in and of itself. I mean, NFT versus say cryptocurrency. Type in both those keywords and see how the search volume has both ebbed and flowed. Unfortunately, you can't really do the same thing when it comes to, like, you'd have to compare it versus, I guess, like a stock. Like people will search for, let's say, Facebook, as opposed to they'll search for Bitcoin, right? So I think the search for Bitcoin, when you use Google Trends in searching the keyword volume, that is an interesting indicator for its increase in the increase in volume in correlation to the increase in demand or interest, search interest versus price growth.
So if I did NFTs, it peaked in January 16th. January 16th, yes.
Yeah, and like then it dipped significantly in February. I don't know whether it's bottoming out, whether it's going to go further, but there's this. I think it's starting to turn. Like there's growing. It's ebbing and flowing.
Ebbing and flowing. That's right.
Yeah.
So if I did Bitcoin, that's the question. So
how's it?
How is that doing?
Yeah. No, share the screen and show that equally.
Okay. So there we have she screen share.
BTC.
I've got too many things on my computer, unfortunately.
Unfortunately, everything's slowed down.
There we go. Screen. Share screen. Can you see my screen?
Yeah.
Okay.
So we got Bitcoin, and then you compare to. That's Hong Kong. Go to global. It's currently in Hong Kong.
Oh, is that right? Oh, okay.
Yeah. Worldwide. There you go.
Worldwide.
Yeah. That's similar.
So.
And then typing NFT. It's interesting. It's like it's expected to go all the way back down. NFT, and then compare. Let's see how it compares. So just type in the next one.
NFT against Bitcoin?
Yeah, Bitcoin or BTC. Just type in or BTC. See if you can just make it. So generally, Bitcoin has outpaced the search, whether it goes all the way down. I'm curious if you type in BTC if it's any different. It's just BTC. Interesting.
Well, it is different because, yeah, it is different. Bitcoin is different from BTC. They're two different
Yeah.
terms,
Yeah.
right? But we
It's
still
closer.
see sort of a flattening out
Flattening
of,
out. Yeah. Whether it's gonna
don't know
meet
what
that
this
expectation. Yeah, just go straight.
now is this going to
Who
have
knows?
partial incomplete data available? Maybe that's what it is. It's they're
Yeah.
in the middle of compiling it or something.
Yeah. I'm curious if
So,
you type in Ethereum to the third, because you can add another comparison.
let's skip NFT and let's call it Bitcoin because we have
Okay,
more.
Bitcoin, yeah, Bitcoin and then Ethereum, and wondering if there's anything. I mean, I imagine Ethereum is far below either of these, Ethereum or
Oh,
NFT.
hang on, I got Atrium.
E, Ether, ETH,
Yes, it is. Atrium.
Ethereum, not TE.
Yeah, that's right.
No, it's yeah, okay. Ether. I don't think it's I. It's, how do you spell it? Not I. E. Yeah, Ethereum. I think
Is
so.
that it?
Or try the top pick.
I think that's it. It must be.
Just their search term and then go to the topic.
I go, no, I got BTC and that's
Your
versus
search term,
Ethereum, and I got
right? Search
Bitcoin.
term, Bitcoin. You have right. Interesting. Ethereum's far below. Okay.
Yeah,
Ethereum. Yeah, I think that's right.
but if you had BTC, which is the signal for the
Yeah.
coin,
ETH, and
and they
then you type in
basically
ETH,
track.
so it'd be ETH. This is BTC and ETH. ETH. Search term. Yeah. I mean that's about yeah. Interesting. I mean, okay, so yeah, just when it comes to
But
this,
your point is valid. The point is, if it's interest that is causing
Mhm.
the demand, then
Yeah,
if the interest increases, the per capita increases, because I think that the number of rich people in the world is not going to increase.
mhm.
Then if the interest per capita increases, then you would have an increased demand.
Right,
And so the question is, are you going to have that?
right.
And I think that's it's a valid question. And
Mhm.
I think that, certainly there'll be interest in it, at least for the foreseeable future.
Yeah,
But it's not in a not in a popular sense,
right,
a hedge against inflation,
right.
but it can be in a statistical sense, a
Yeah,
hedge against inflation.
yeah. I mean, yeah, as someone coming from studying film and arts, this is definitely not something, and on some level, I guess personal development and spirituality, this is definitely not something I typically would have thought of that would have gleaned my interests, but I'm continued. My fascinations is still continued, mainly due to um, an understanding that genuinely the thing that I guess on a business sense that interests me about um, creativity, creating of an asset, is its value, right? Like I make something, I make some piece of artwork, and then someone else wants to buy it, and then at that junction, there's always been cognitive dissonance for me. Like I've always felt a sense of like, well, there's the idea of worth, and then who are you to charge this, and how do you earn that worth, and all this, that, and the third. And so to be so removed from that conversation where I can literally be graphed out, and it's already being done for me, and I'm not worrying about like a company's like expected return or how well the company's doing, but this is purely just almost the let's say the PR or the not PR, like the misuse of the word PR here, but just like the the value of Bitcoin as a conversational piece. If for some, like, yes, there are certain negative caveats when it comes to the its impact on the climate crisis, on energy used to mine Bitcoin. I mean, I'd say there's equally that same caveat given to gold on some of mining of gold is not like a nice thing to do. It's still like its own costly resource.
Depends on how you mine it.
I suppose, but
right. If you pan it in a stream,
you pan it, yeah, right. If you're panning versus like blasting or like.
If you blast it and then you make this huge pile of ore and then you leach it through with acid and right, it can be more potentially polluting. This is true.
Yeah, yeah.
Right. But
so anyway, all that
energy, I think that probably Bitcoin's got it beat.
Right, and there's also the let's say new ways of mining it, leaching with energy, where people are using it. I've seen these. What is it? It sounds far fetched, but like using somehow the energy from a volcano. Is that right? Or how is that? That was like an article that was being circulated. I have to like that's a conversation for another time. But like we're actively transitioning, with let's say companies like Tesla switching from oil to electricity, and so this switch of how much energy and how that energy is generated. How do we mine? How does Bitcoin get its energy such that it can be mined efficiently?
It gets
that question.
It gets it from the grid, and this is why, Kazakhstan, which has natural gas, and Texas are good places to mine Bitcoin. The Soviet, Russia, I suppose, because they have vast quantities of energy. But yes, it's,
there's alternate sources. That's what I'm like kind of speculating at, and that's what I've seen floating around, though it's not sort of an active solution right now. I can't see why why it can't be in the future. Because like you're saying, the most active one is the grid. You just plug into the grid and you take, if it's cheap to get electricity, that's how you get it. But if there's alternate ways of getting that energy, then
you could also plug those alternate ways into the grid.
Right.
And you'd sell it.
And so, right. Exactly. So anyway, I guess, I think we've sufficiently answered it earlier.
So the next week it's
yield farms.
Yield farms. Okay.
Yeah. I mean, I sent you. I'll resend to you the conversation. There's like 4 different conversations I sent to you on YouTube, and I know that, like you said in our previous discussion, our first one, that just to send you one. So I'll resend you the one in that 4, where he talks Data Dash, Nicholas Merton. He talks to Alex McChensky, who's the creator of Celsius. And so Celsius is this company that gives sort of a safe yield farm, whereas because once you get into yield farming, you can get really messy when it comes to decentralized.
Right. Why don't can we make the topic making money from crypto even when crypto is not making money?
Sure. Yeah. Even in the bear market, maybe just even in a bear market.
Well, when it's not making money, so they can be flat, but making money from crypto when crypto is not making money. That, and then if you can describe.
I don't know. Then I just get into the question, like, what does it mean for crypto not to be making money? Are we talking like it's not like it's not bullish, even when
what has been the last year?
Right, which is right. It's not been right. So I guess even when it's the volatility is stagnant, when the growth is stagnant.
The growth is stagnant, but it still has positive volatility.
Positive volatility. Fair enough. Yeah. So even when that's what not making money is. Right. Fair. Sure. So making money even when crypto isn't making money. I mean, yeah, it's a loaded statement, but yeah.
But I mean, I was thinking in terms of selling this thing, sort of if you post it with that as a title, then that would have some attraction to it. I'm right now I'm on week 3 in posting my videos. So I haven't done any promotion of them, and the book's not out yet. So um, uh, I'm interested to see if they can just promote themselves. I've gotten now 49 views. So, yeah, you
Yeah.
know.
Well, I mean, this is what for me, I appreciate hearing you say that, but more than anything, it's a reminder too of the content wheel and how it will only churn the more you learn how you play with it, and how you best play with it. And yeah, this conversation, these recorded conversations, is like a journal reminder of the ways in which I find it easier and easier to converse on these topics. Because in my mind, I very much easily can feel overwhelmed and scattered, not given the feedback I'm given by others, but equally internally in myself with just the separate topics. So, I mean, to root back to what you said with the 49 views, I genuinely believe that, yeah, the more you have content out there, uh, much like the more you're journaling and you're keeping track of what you can actively say, that's the feedback mechanism for the content algorithm. So it's like a double feedback loop. You see what I'm saying?
Yeah, yeah.
Yeah.
So if we're doing how you can make money from crypto when crypto is not making money, that's what we're doing next week. So
Sure.
what can we do the week after?
Um,
Is there
the week
something?
out. I mean,
So what that's going to do is that's going to take us into um, uh, platforms and wallets and this kind of thing, right? Is there
yeah, like
something
it
that
gets really sticky the more um yeah, we go look into, well, actually, that might be that's definitely a segue into other platforms, because at least how to make money even when crypto isn't making money, like I'm seeing that as like it's a massive question.
right? And you're going to do
Meaning,
basically yield farms, right? Which is great, you know. And I think that I'll really be interested in seeing that. Um, but from my point of view, then I, I'm asking an institutional question. So, what are the institutions that support those yield farms that
right.
allow? Oh,
So that's where I'm trying to say that let's start um with just one institution, when that one institution is Celsius for the time being, and that we can like branch off with further institutions, because there's CFI, the centralized cryptocurrency, and then there's DeFi, which is then like the interwebs. It's literally like any what's they call them, degenerate cryptocurrency enthusiasts that create their own yield farms from whatever shill coin they come up with. And some of them are legitimate and some of them really aren't, like any startup where it's like, and you could even pretend like it wouldn't be absurd to come up with a statistic like, oh, it might be like 1 out of 10, right? Where you're like this investor mindset where like 1 out of 10 of your investments will actually yield in the long term. They'll actually stick it out. They'll stick out and grow. So anyway, Celsius for next week, for the week after next,
right.
I'd say we
So,
can.
what's the question about Celsius?
Yeah,
Is Celsius a platform
yeah, it's a
for trading?
platform for yield farm, and they give you Celsius token on. So that's the yield you're getting. So you provide them the cryptocurrency asset, and then they give you Celsius coin. Um, and that can equally be eye rolled by most outsiders as this sounds like a Ponzi. And this is where
Okay,
you can like provide analysis so that at least to dismantle a little bit of that
okay,
reactive
fine.
approach.
So why don't that? So next week is how can you make money on crypto when crypto is not making money?
Making
And
money.
and the next week after is Celsius a Ponzi?
No, I've got it. Let's like, because how do you make money? I mean, okay, so if that's what we're doing it, then are we just talking like how
Well, we're
people
talking about the
use the
mechanism of yield
okay,
farms, right?
okay, fine. Yeah, sure. Then
Yeah.
if we're just talking about the mechanism of yield farms, then
But don't make it Celsius a Ponzi, but how, but how can Celsius, what's the oxygen of Celsius? I don't know. I mean, I'm looking for a snappy,
I mean, it's
Celsius.
Celsius a
We don't
Ponzi.
need, we
That
don't
would
need
be
snappy. What is,
that is what people would search. There's no reason why people wouldn't search is Celsius a Ponzi scheme. And I'm sure that I know, yeah, not firsthand, but I know that on some level that he's addressed that question before. Alex
right.
Machinsky, there's no way he hasn't.
There's
So
no, he hasn't.
yeah,
Exactly. Okay, fine. So why don't we stick with that? If we don't like
sure.
it, next week we can change it.
Yeah, right. But when it comes to like how do yield farms operate, like are we just talking about the mechanics of it? Because I'm trying to like get into when we got into the nuts and bolts this week, at least like there was data sets you could look at. Whereas if we're just talking instructional next week when it comes to how do yield farms work, I mean, in a nutshell, it's just literally providing a coin. It's the same thing that Celsius is doing. Celsius is doing it on an institutional level, whereas yield farms, they'll either provide you through staking. Like this is just the mechanism of it. You provide the asset to the yield farm, and either through their staking of the asset, you're getting yield from them staking it. So instead of you having to stake it yourself and then set up the apparatus, the computer in which it's residing, and you're providing to some third party that does it for you, and so that yield is generated from the coin itself, so you can get more of whether it's whatever the altcoin you choose, and or you're getting a third asset, or sorry, in this second asset, which is the whatever yield farm coin you want to call it. So Celsius does in their legitimate legitimate, I guess, in quotes, but it is legitimate to the extent that it's, I don't know if it's crossed 1 billion yet. I'd be really surprised if it was under. I mean, I'd rather just know the exact number, how much you can see it on your site. But so anyway, that is the mechanism of yield farm. So I'm trying to figure out what to elaborate on beyond that in next week's video.
Okay. Quite frankly, I don't quite understand what it is. Okay. So if you can take me through what a yield farmer is, and what land he's working on, and what coin he's planting, and what the yield is, and how the yield is measured, and how he can realize that in what we normally think of as currency, then that would be great. So okay. It strikes me that would be taking me through an example, that would be at least 10 minutes and might run closer to 15 minutes.
Sure. Yeah.
Okay.
So it's more instructional as to how to do it.
That's right. Walk. And then if you walk through an example and then gave some macro numbers, and then by next week, I will have found out something about it. And I don't know what that something is that I'll have found out. Okay. And that may or may not lead to an interesting conversation, but I can't see it being less than a half an hour.
Okay, sounds good.
So that I'd be doing 10 minutes, if you see what I mean. And you'd have 15 minutes. And you see what I mean? I see. And then is Celsius a Ponzi scheme? If you want something that's sort of sexy and fine. I mean, I personally, I don't believe it is, but I mean, and I'm, but I'm sure that
I know for at least its longevity and for the credibility of the founder, I don't believe it is in the slightest, but I'm sure that is a question.
Yeah, and we might have a better question by next week.
Sure. Yeah, sounds good.
Okay.
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 Okay. So,
Right.
what was the biggest takeaway for you in this week's series?
Daylight savings time.
All right, caught you off guard. So nothing about the video itself about it being a hedge against.
Not really, no.
Yeah.
It was sort of taking me into a little bit of banking,
Mhm.
and I was interested that Fred is actually quite easy to use.
Yeah.
If you want a series, then you can get them from. Right. I shouldn't have used Brent crude, but I can't think what I should have used.
What's bread crude? I don't know what that is.
Brent crude oil. It's basically a
Oh,
barrel of oil. It's the best.
well, I mean, I feel like you might be interested in using the amount of graphs over longer periods of time on TradingView, which is a graphing function. I mean, not function. It's an app that I've been using just to uh, see the active real time movements of most assets, whether it's stocks or commodities, or whether it's, I think they have the M2 money supply there, and they have, it's amazing the amount of data they have on TradingView. So I recommend that. I can send you a link for that.
Sure. Okay, that's
Yeah,
good.
yeah. But yeah. So yeah, I guess look forward to talking you through yield farms next week.
Great. I'm
Yeah,
looking forward to that as well.
yeah.
Okay.
Okay.
Okay. So
All
are
right.
you have you figured out what you're going to do with this stuff, or is it
I mean, sort of in the sense that like it's getting it in a bucket of like this is where this goes, as opposed to like uh yeah, like it helps that I guess for the reminder that I can just link this to your YouTube channel, so that there's a sense of like continued conversation, because on some level, like I know that what interests me at the end of the day, I was saying this earlier, is the conversation to do with value exchange more than cryptocurrency itself. Like I got into cryptocurrency for the main reason of curiosity and sheer exhaustion from just the film industry, and not wanting to just engage in that conversation in the slightest. A year out, like it's not that I've amassed any level of wealth. It's more so just a certain uh, a nice distancing from what feels to me as antagonistic, sort of like, well, I believe I'm worth this, and so anyway, what am I doing with this is trying my best to make it cohesive in a way that we have our conversations, which like I could just post willy nilly, and on one level, that's better than nothing. Um, but then on the different level, like, what am I doing with it? Like, short answer, I don't have a clear answer. Clearly, like there isn't any like clarity when it comes to like, well, this clearly fits in here. Other than like, well, there's this conversation we had. I'm having this conversation with my dad. Just put it online and see who's interested. That's all I have right now.
right? Okay. Yeah, I mean, if I were uh, giving advice on to doing it, I would chop it up into bits that would be no more than 5 minutes and might be only 3 minutes each, and each one have something catchy. As
Sure.
to,
Sure. Yeah, I'm sure there's something we can find 5 minutes in each of our recordings so far.
I mean, I'm not touching this.
Right. No, I get that. And the question, no, I mean, it's helpful to know that, like, what is the progress when it comes to, or what's the current situation when it comes to your book?
Well, the book, I will not see it again until it comes out in physical form now.
Say that again. It doesn't
I will
perform
not
now?
see it again until it comes out in physical form now,
Oh, physical form, right.
right?
And that we like the initial estimate was at the end of February.
That's
So
right, February 28th. And I saw the complete PDF with everything by the end of February.
right,
And now now I look on the web and they say that the publication date is April. Now, I don't know quite why it takes physically that long to publish it. Maybe I think probably it has something to do with distributing it, right? So I'm not sure exactly where it's physically being published, but
right.
and now I've got on the videos, I've got I've been doing it for 3 weeks now, so I have I guess it's something like 16 videos.
Yeah.
So
I mean, yeah, the more that you can come up, the better. Like I know that when it comes to just coming out with content in and of itself, the idea of coming up with concepts can seem straining. So that's kind of the upswing of this back and forth conversation with me, where definitely I get caught up in uncertainty of like what it is that I'm interested in discussing, like genuinely. And so, yeah, I'm sure for you to have those 16 topics and to know if there's any more, that there can be a continued, that it's almost like your own regimented uh
well, you see, with
like
mine,
you are
it's very easy because I have the 12 chapters.
right.
And when and I already had thoughts on how them, and then we did that recording session, and I'm using yours since I've talked about them in the 12, and I'm breaking up and using some of the materials that you gave, and I'm much better in the um, sessions that you recorded than I am on stuff that I record myself. It's more
Sure.
comfortable.
Well, yeah, I'm sure you are. I mean, no different than the conversation's easier than self-generating that interest. um yeah, no, I'm grateful that we were able to record all that. Like
Yeah, it's good. Yeah.
yeah.
And in terms of people picking up on it, um, in general, those, see, I've got one, two,
Well, I think
three of those.
the picking up on it, like that comes obviously over time. Like I think we're definitely looking at it wrong when it comes to any sort of instant virality. Like the growth of any interest, I think, comes with your continued uh publishing. Like any, like the more, I mean, it's weird, right? There's equal value in either camp, where yeah, I've definitely seen content creators that have their 12 videos, and because their 12 topics are just pinpoint accurate when it comes to their keyword um research, being in a, I mean, and the weird thing is you're in a market where I don't know necessarily how much there is out there on the said topic that you're already doing. So let's just say for the time being that there isn't that much that's
Yep.
available. So then it's just a matter of like, okay, so at what point does the interest grow? And if once the interest does grow, if the interest does grow, how can we siphon that in like, how can we put your videos at least in front of that crowd? Like how do those two things align? I don't know.
Yeah. Anyway, so that's, yeah. I mean, but if um, okay, well, we'll see each other next week with the
Next week, yeah. No,
on.
these are good. I appreciate that every now and then. Like what was it last week that caught you off guard? It was, oh, that Russia uh revoked their, or capitulated on their ban, on their ban.
Right, right, yeah.
Yeah. Um
Yeah, I guess what caught me from the topical point of view, it was that in fact it is an inflation hedge.
right,
Statistically, it is an inflation hedge,
right.
and that's in the numbers. So
Yeah,
I was interested to see that. I didn't do the analysis myself.
right,
Uh, I don't do VARs, vector auto
right,
regression models,
right.
but they did it. I trust their work. It was a credible
Sure,
publication.
sure,
Um,
yeah.
but in and that's interesting because in a popular view,
Mhm.
there's no way that you see this as an inflation hedge. This is a speculative vehicle.
Right. Yeah.
And yeah, I mean, it might go through the roof, but
Yeah.
uh,
Might, yeah.
and
If it does, I'm sure people who are on the sidelines, you're like, son of a bitch. Like, I'm
right.
sure
Well, this is it. And there's probably still, even if it goes to zero, which is where I think it probably will in the long term, then it will probably still have some life in it before it goes to zero. And given what I was saying in the first lecture, or the first discussion, it may never go to zero because it will have this sort of iconic value.
I mean, that's what I believe by and large, just because it's baked in for the past decade. I don't see that going anywhere, at least in our lifetime. For like you mentioned, whatever it was, the like it's like smartphones going away, or it's like the internet going away. You said earlier at the very beginning, like not Bluetooth, what do you call it? What are they called? The early smartphones, the with the the smartphones I'm talking about, where like you
Right, the
compare
BlackBerry.
Bitcoin.
BlackBerry.
Blackberries, yeah. Well, Blackberries, were they even around for a decade?
Yes, about that.
About a decade, yeah. So let's say that if in a decade it doesn't go, I mean, 2 decades, I don't know how long, because let's say even there's a similar argument that was made around superhero movies, where, okay, superhero movies kind of like the Western movie where the Western had its cycle. We don't really see as many Westerns. The Westerns were like that phase of superhero movies. I mean, now the modern day Western is the superhero movie. Like that, West superhero movies seem to still be going strong after it's a decade plus now. I think they kind of got their upswing. Like they were being toyed with in the early 2000s. In 2008, Marvel sort of launched with Iron Man, and now in 2022, Marvel's like one of the largest movie producing houses uh, that exists in Hollywood. So, I mean, I if I'm like at least a betting man within my lifetime, I don't see Bitcoin, going to zero, or yeah, as you said just now, that it will, even if it trends down, that it won't trend like beneath. Let's say even let's say like if the explosion point was what, like it was like 10,000. That's when it exploded past 10,000 at the end of 2020, right? In 2021, that's when it went from like 10,000 to like 20 and then 30,000. Um, I remember like we throughout 2020, it was like bouncing between like 8,000 to 10,000. Because like something that Matt says to me is like he's not investing in Bitcoin or cryptocurrency because he genuinely doesn't know how to value the damn thing. Like he's just like I don't know what is it actually worth. Like
Yeah.
how can I know? Because it all seems so speculative. And the
July
only
2020.
July
Well,
2000,
July 27th, 2020.
what happened July 20?
That was
That's
when
when
it went from in one day from $9,944 to $11,108 in one day. And
right. No, I'm talking about what happened at the end of like 2020.
this is 2020. So you said it burst to 10,000. That was the date.
It was a birth to 10,000, but like, what was that? There was like a like at the beginning. I guess it was the beginning of 2021. It was like January 20, like in January 2021 to
29,391. January
like
1st, 2021.
it jumped up to how much?
29,390.
29,000. 29,000, right. So they like doubled and then it went again and like up until March. March is when it peaked, right? In 2021.
Right. So
Yeah.
it's 63,660,
Yeah,
March 13th.
yeah. So
These are end of day prices.
yeah, yeah. But I guess I bring up these numbers because I mean I think of it like any asset. If we just go with kind of like a median of all these numbers, um, do we go with the median or do we go with the average? I'm not sure.
I'm not sure what you mean go with.
Like when someone says like how do I gauge the value of Bitcoin? Like how do I actually know what's a good value to buy it at?
Right. Well, there's no way to value it because it doesn't have an expected cash flow.
Right.
So this is, I mean, it's true. This is a problem.
Yeah.
And this is why I was saying that, you have to treat it as an icon,
Right.
not as not as a financial asset that has an expected value.
Right.
So it's
Well,
more an icon, a work of art,
yeah. Yeah.
right?
Right. When this is like Matt doesn't buy art, which is why he doesn't buy cryptocurrency. Even though it's like he's in the demographic, he's in the age bracket, like everyone in our age is interested. Everyone, I say, I mean, like it's let's say in the cachet, it's in the. When I say everyone, I just say it's seemingly more interesting than buying gold. But yet, there's I know people in my age bracket that don't buy it still because they can't speculate on something because they don't speculate on art, they don't speculate on things they don't understand.
Right.
Yeah.
And I think that there's he's got a point.
Yeah.
So there's the series that we were talking about.
Right.
And so you say, well, what should you use? Should you use the average? Well, if you average it since 2014, you're going to end up with a number around 20,000.
20,000. Yeah.
Right?
Yeah.
And if you average it in this period, you're going to end up with a number around, say 45,000.
Right.
So but I don't think that averaging is the way to do it.
How would you do it?
Well, this is why I'm curious whether or not owning a Satoshi is good enough. Because if owning a Satoshi is good enough, then it belongs down here someplace.
Well, I mean, there's an app which I shake every day, and I give you out something like 25 satoshis every day. So,
Right.
so I don't know. It'll be interesting.
So I guess that I'm very bullish about the technology of blockchain. I'm bullish about central bank digital currencies, but not about unregulated crypto.
Right. But you have, if you were to buy into anything, as you said earlier, and that should be maybe the following week after you go through Eurofunds, the discussion of smart contracts in Ethereum, because you had mentioned way back before we did the recordings that if you were to buy into any cryptocurrency, it would be Ethereum.
Right, but Ethereum, they're still using proof of work. They've been talking about shifting, but they haven't shifted, right?
I mean, that's a whole conversation. How much they've shifted, what they've shifted. There's been shifts. Things have changed on some level. I don't know to what extent. Yes, it is still proof of work. I don't know. There's some like Ethereum. Whenever Ethereum 2.0 does come out, so that is also like that's what you're mentioning. The proof of stake, which is proof of work. what are the current changes that have already been implemented? I don't know. Like I can't say clearly what they are.
Oh,
But
one other
there's
thing on, one other thing on, I'm not sure if it's your speaker, your microphone, but listen when you go through the recording, because there seems to be a lot of static associated with your mic.
that's
You're
unfortunate.
looking,
Was it the same static last week?
I don't know. I don't
Oh,
think,
okay. I'll go through it. Yeah, understood.
but if you're looking
Okay.
for quality that you can put on the
Yeah,
web,
understood. Yeah. Okay. All right. Well, we'll leave it at that then. I mean, okay. Yeah, so before I let it go, yeah. What do you think about discussing, yeah, Ethereum, and because you
we see,
that's the one.
I don't know anything about Ethereum. So what
Smart contract.
would we uh we could do a whole thing on proof of work and proof of stake.
Well, I mean, the thing, the headline, given the stance that you have that you wouldn't buy Bitcoin because of the reasons you've already outlined, but you had mentioned that you would buy Ethereum if you were to speculate on any asset, like just to outline. So it's not just proof of stake versus proof of work. It's whatever your reasons are, isn't it?
Okay, the thing is, I haven't done the research at all on Ethereum. I understand that it's more versatile with respect to smart contracts.
Okay.
I I suppose we could do something on what smart contracts got to do with the price of Bitcoin, something like that.
Sure. Or like, what is your? I mean, I'm looking. The interest piece that I have is like, what does my dad value about Ethereum?
Well, see, I know I don't. I wouldn't buy Ethereum.
Or you wouldn't? Okay. Like I remember we had
I was
a really
interested.
offhand
Yes,
comment.
I was interested in it because I know that it was useful. It was a
Okay.
better basis
Yeah.
for people working with um, uh, industrial-based blockchains. And one of the
Okay.
reasons why was that for some reason it was better for smart contracts. And I hadn't done the research. It was other people that had said that.
Okay.
But I mean, I'm quite possible. You said that earlier that this series should be entirely Bitcoin because at least that's focused. Um, so that's why I suggested if you wanted to do something on this, it would be what smart contracts got to do with the price of Bitcoin.
Sure. Yeah. I mean, when I said that earlier, I think I just meant that when it came to every individual topic to keep it focused around. I mean, really, the bracket that we're focusing this all on, I think, is crypto assets. Because we're going to yield farming now, and like yield farming, as much as it can be done with Bitcoin, that's the last. I mean, not the last, but that's like the lowest yield, one of the lower yields you would get is on Bitcoin. Maybe not the lowest, because I'm sure there's some yield farms that can give you good yield on Bitcoin. But what I'm trying to say is, the second we start talking about yield farms and Celsius, like we've on some level opened Pandora's box of like all their
Right.
topics.
Right. So on these two, if you give an example, and I hope that you will give an example, can you give an example based on Bitcoin? And then
Yield farms?
Yeah.
Well, I
And
mean,
and then you do
for the
your other
example,
example and then you do your other example where you're making more with another currency. You see what I mean?
right. Well, I mean, the example, just to tie it with Celsius, I'll be using just because Celsius is a trusted platform and be an easy one to navigate. Like I'd rather leverage that trust than. I mean, there's two actually. I can use a different platform. Yeah, sure. I can use a different platform so that I can transition to Celsius. There's more variety.
That's what I want.
Yeah, sure.
So,
The other one is Aave. Aave is also, there's a few actually large. Sure. So I can use Aave and show you how I'm generating yield on using Aave. Yeah. Okay. And then the question then comes to how to tie it in with Bitcoin. No, we don't have to worry about tying it with Bitcoin.
Well, I think we do if that's going to be the theme of these, so that you do a comparison where you should, it's not Bitcoin, but you're
Right.
also showing if the how do
Expected
you
return
define?
of
Yeah,
holding right one asset over another, and the generated return. Right. Yeah. Okay. That's, let me wrap my head around over the next week.
okay,
The numbers. Yeah. Okay. All right. All right. Lot to chew on. Okay.
yeah, right.
Yeah. All right. Love you. Talk to you later, Dad.
Talk to you later on. All right,
All right. Bye.
bye-bye.
All right.